So, hello and welcome to the investment show. Please note this is for entertainment only. This is not investment advice. This is in entertainment only. Do your own research. So, today we're looking at another high yield product, which is a REIT. And currently it is paying 12.3%. So it's called Angel Oak Mortgage REIT, and it's a common stock, and the ticker is AOMR. So if we look at the share price over the max period of time, it's sort of something to monitor over a reasonable amount of time. It's got a nice sort of upwards trajectory, and more recently it started to come down. I mean, it may have support around 10, but do your own research. It trades on the New York Stock Exchange under finance real estate, and the analyst thinks that it's going to 11.25, so that's roughly a dollar upside. So you've got to know this sort of thing. It's paying about $1.28. It has gone ex-dividend, so you're not going to get the payment until, well, that's September. I'll have to show you where these are. So yes, I mean, if you purchase it, you can be ex-dividend and then sell it on the 23rd to get paid on the 30th. So Angel Oak Mortgage is a real estate finance company focused on acquiring and investing in the first lien non-QM loans and other mortgage-related assets in the US mortgage market. Its objective is to generate attractive risk-adjusted returns for the stockholders through cash distributions and capital appreciation. So that's generate attractive risk-adjusted returns for its shareholders through cash distributions, capital appreciation across interest rates and credit cycles. So let's go to the site. So here, if you go onto the website, say yes. Let's get it out of the way. So you can find out about the company. What I usually do is find out if there's investor resources. So you've got different types of mortgage applications. You can have a look at certain events or about. So they don't really have too much on for investors. So let's have a look at AOMR dividends. So let's see if it's still recording. Yep, lovely. Let's make it a little bit bigger. So you need to find out the dividend history as well as the dividend payment. So this usually comes up and it gives you an idea of when you need to keep it until and when you're going to get paid, so you can track. So this looks like a quarterly one. So when it comes to the point where they are going to tell you when it's going to be X dividend, they'll tell you the amount. So here it's X on 22nd of the 8th. So, but they declare the actual cash amount on 8th of the 6th. So you can probably work it out when they're going to be declaring the next one. And effectively, this is the record date where they will take a snapshot of who owns this particular share or stock on this particular day to give your dividends on the 30th of the 8th. So this means that you can see what the dividends look like. You can buy it. I mean, sometimes depends on the volatility of the share over time, but sometimes people monitor it, buy it, maybe on when the share price may be dipping for a bit, keep it sort of buy it on the 21st, keep it on the 22nd, sell it on the 23rd, reap the dividend, and then you might have a number of these lined up so that your exposure is, what's that? That's about a week. So your exposure is about a week. The issue sometimes is that what you're trying to do is you're trying to anticipate that the stock goes down by more than 32 cents. So effectively you buy it, and this does happen. You buy it beforehand when people might want to sell too early or they get a bit worried about the market. You snap it up, and then after the record date, the share price will go down by 32 cents, and then you'll get that being paid to yourself 7 days later. So it's always good to make sure that you have a monitor. You have a number of these products that you can get paid. I mean, a lot of them pay the end of the month, but you can get a lot of these products lined up where you have the exposure for a short amount of time, and then you monitor them for disruption. So if people are just trying to run for the exit, you may be able to get to pick up a lot of shares where you can still be getting the same dividend. I mean, one of the things here is that let's take it sort of 2022. So you had a nice cash dividend of 45, and now it's 32, but it's consistently paid out for 2 years at that rate. Now, with interest rates coming down, the borrowing should be less, and this company may sort of get some deals. Now, this thing here, you've got to look at a lot of it. Is it people just exiting? Is it people just exiting because they've got their dividends? Or is it sort of repricing because the dividends have been paid out? Because this will probably, I mean, not always this day is a trading day, but that is something to look at because you're looking at 12.36. So you're looking for dividend appreciation as well as stock appreciation. The way I normally see it is you've got the interest rates or the Fed fund rate around 5%. So you get a clear 5%. So what I normally do is I normally knock off, we may see this as sort of a 9% stock. So if we lose 3.3% in the product, then it's time maybe to bail. But I mean, things can be going your favor. So the share price goes up, of course, the dividend yield goes down, but you need to calculate your effective dividend deal, because you may have bought it when the price is $8 and then the dividend yield will be significantly higher. So, oh, sorry, you need to make sure that also you get a reasonable volume, because if you have bought this product and you can't shift it at the rate that you want it to, it may be very difficult to offload. And also, the time that I'm at is 9:21, so we have seen a massive increase here. But the interesting thing is to look at 7.6 to 13.32. So it's got a potential to go to either of these extremes. Make sure that you calculate, if it goes to this extreme, what dividend you are paying, because a lot of people want the dividend not for reinvesting, but to actually use as money into other projects, or they want it as a quasi annuity paying out every month. So I hope you found that interesting. I think the thing to do is to monitor these particular shares over time. I like, what I like to do is I like to track it on a Monday to Friday, and determine if there are any periods where there is that volatility, because sometimes you can note that people do their paperwork on a certain day so that there'll be increased buying or increased selling. And if you can have that particular edge, or you just go out into the market, I mean, taking this as an example, you might just want a good till cancelled of $10. I mean, you've got time, but you need to make sure that that is maintained on a sort of a daily, weekly basis, because if the market is in free fall, you probably don't want to pick up something which will go against you. So it's always good having these solid companies. If you're investing a lot, it's probably good to look at their web pages through and through and listen to their previous audio calls, as well as look through the latest event PDFs to give you an idea of what the issues are, what the potential good things are about this company, and what the things that may trip it up. Also, you need to determine how much cash they have in reserve, because you've got some of these companies that pay out this regular amount of money because they want to make sure that you have a regular income, and they might be continually contributing to this payout. Or you may have other companies where it's sort of very good in certain periods of time and very bad in others. So you want to look about consistency. I mean, they may be a sort of a company that only make the most money in the summertime, and all other periods it's a little bit of a drought. But that's no reason to not. But you need to find out how many dividend events are covered by the company. So thank you very much for your time. If you could subscribe to the channel by clicking the subscribe button. If you could comment, and I'd love you to share this on social media so I can get more listeners. If you found this of value, you can donate. I'll leave the details in the show notes. And also, if you want to sponsor this and other channels, I would also leave those details in the show notes. I hope that helps. Do your own diligence, because this is entertainment information only, and it's really attracting the good products out there which can be utilized to get both income and growth, and get that income reinvested, which is probably one of the better strategies, because then you get sort of long-term uh, exponential growth, where a lot of people, they invest, they see it go all the way up, and they see all the way down, and then they sell. So they probably don't sell at the high, they probably sell at the mid-high. With this, you're just extracting money from the company you're investing in. You need to keep probably a daily, weekly eye on this, depending on how much you've got invested, and then you can sit back and know that from the declaration date, you're almost guaranteed to get that money in your stock trading account. And then if you need to, you can extract that money so that you can use it to live on, either in retirement or now, but also you can utilize that to reinvest in potentially the same sort of high yield products. You may be wanting to just shove this into an index, or you may want to put it into something which is reasonably high risk to get those reasonable returns. Thank you very much, and I will see you on the next one. Bye bye.